just created this dope web.
Hello everyone, good afternoon and welcome to today's Trading the Markets Live with the Live Trade Room. And today now is Friday the 20th of July. So what we're looking to do is to capitalize on some high probability trading opportunities during the session. So without further ado, let me bring up our risk warning. Just familiarize yourselves, of course, with the risks involved in trading these financial markets. Yes, it is an inherently risky environment, but therein lies our ability to make consistent returns. So it's the management of that risk is where we generate our consistent success when we trade these markets. So, and that's something that we will continue to work with you the longer you're with us. So just before we begin then, let's do a quick review of potential market moving news events. So for this, we shall get up our trading platform. Our news feed platform, which is Forex Factory. And what we can see is we've had some significant inflationary based data out impacting the Canadian dollar. And we'll have a look at the Canadian dollar now very, very shortly. But you've seen we've had quite a positive upside deviation to the core retail sales figure, and it's a monthly figure. So they were expecting 0.6%, and the actual print itself is 1.4. So that's a sizable increase on the expectation. And the monthly CPI figure is bang on forecast. So in addition to that, obviously we've got some significant news events in the background, and I'm sure you're all aware of Trump's recent sort of position, whether it's regard to Russia or whether it is with regards to his dislike for the Fed increasing interest rates, or the fact that he thinks the US dollar is overvalued. Whatever position he seems to take, the markets can react quite significantly as a result. So in addition to that, we've obviously got Brexit negotiations. Obviously the UK government is having a particularly difficult time. So there's a lot of geopolitical risks on a global basis, and of course the trade war as well between the US and Europe and Russia and China, should I say. So these are all significant factors that are impacting these markets at the moment. So let's go and quantify some opportunities. So the first one which we'll look at is the euro dollar. So we've been looking to buy this on a couple of occasions already today, but what we can do is we can identify just above yesterday's high as the high probability trading opportunity. So now we're looking for opportunities to buy above this level. And of course, we've already broken above it. So we'll come back to showing you how we approach opportunities. So you can capitalize on the breakout above that level, or you can wait for the pullback. So we'll come back to this very shortly. I'll just flick it over to the 15-minute time frame, and you can see what's happened effectively just over the last 30 to 40 minutes. We've had a really strong explosive move to the upside. So that is principally the theme, certainly for Friday afternoon. We've had a rejection off the lows, as you can see across the board. So I do want to make reference to these highs, and then it's a case about selecting the higher probability opportunities across the board. So we're getting the push below the 112 level. We're currently at 111.86. So again, there could be an opportunity to capitalize on some further dollar weakness today. The dollar CAD, which was the interesting one. So we had positive news over and above what was expected. So of course, a good candidate for some continuation to the downside would be the dollar CAD. And I'm just going to show you this on a 15-minute time frame. So we had the news, and then we had the extension to the downside. So we've already got we've already seen the move, and now we're just going to monitor and just wait for that opportunity for this market to pull back. So I do want to identify these four trades. So we'll look at those opportunities very shortly. So we'll come back to those. Dollar Swiss selling off as a result, and we're getting the same sort of bit of price action across the other dollar pairs. However, we're going to focus on these four for the session. Now, in addition to that, I'm going to flick through the rest of the currency pairs. We've got a bit of indecision in the euro pound, so we'll back off from that just for the short term. And with the yen markets, so a bit of weakness in the yen. We're getting. So what we're looking to do is to effectively potentially look to buy the euro and the pound and look to sell the dollar. So the other market that we do really want to focus on is a bit of a reversal off these lows, so we can take a note of these highs, should I say, and look for an opportunity to see if we capitalize on a pullback to take this market to the upside. So we're going to keep a close eye on this one as well. Crude oil has been an interesting one. We were looking for opportunities to break above the 69.55, and we got the mildest of little pokes above that level, and we've reversed pretty quickly off that level. So it just shows you the importance of these daily highs and how the market can react above those levels. So we'll keep an eye on it, but it's not really going to be a strong focus on for us for the session. And just a lot of this ongoing indecision in the markets is impacting the US equities, so they're just coming off just a little bit. We're also seeing the FTSE 100 pull back off this range high, but really choppy, sideways moving price action, and nothing to get too excited about for the remainder of the trading session. So we've identified $4 pairs and the gold market as well. So they're all correlated with one another. So what we're going to do is we're going to have a look at the gold market bottom right. Let's look at the dollar CAD top right. So we know that there's some significant there's been a news event which has strengthened the Canadian dollar, so we actually have that rowing in behind it. So a bit of a pullback, perhaps to the daily low of the 31.57, would give us that opportunity for this market to roll further to the downside. Now, the dollar yen, we're gonna come back to on a few occasions. So what we'll do is we'll have a look at the euro market top left, and we'll have a look at the gold bottom left. Sorry, the pound dollar bottom left. And as you can see, these are reversing quite considerably above this level. So this is a good opportunity to look at some opportunities which are kind of counter trend and how we would go about trading those opportunities. So these are the four markets we're going to look at. The first one that is quite interesting would be the gold market. I want to see what this looks like on a 1 minute time frame. So we're getting the pullback very, very close to these lows, and now it looks like we're getting this little bit of an extension to the upside. The only thing we need to be aware of really is knowing and understanding that it is a Friday afternoon, and you can get some strange behaving markets on a Friday afternoon. However, we're going to go with the prevailing winds to the upside, and we're going to potentially look to see if we can get into this market above the 12.30.52 level. So we'll see if we get a close above that level. If that's the case, we'd be happy to look to buy at that point, and we can actually use the 12.29.73 as our stop loss. But it'll have to work quite hard, and we'll see how we get on with that trade. So we're currently getting that break to the upside, it looks like. So let's see if we do get that price moving above the 12.30. So that's our trigger to look to get into it. If it conforms in a way, so we've had the pullback, we've had the sideways moving price action, and now we're looking for the extension trade to the upside. So the dollar CAD, we really want it to pull back to the 31.50 level. So so there's a 20 pip pullback really required in this market. So let's have a look at it on the 5 minute time frame, and then on the 1 minute. So we do want to see this reversal. We do want to see this price come back. I suppose a really good example actually would be to see when we got the break to the downside, we also got the pullback to that level, and that could constitute that lovely little pullback trade that we like to trade. So now we're getting something quite interesting, because we're getting a structural failure now to the downside in the gold market, and the dollar CAD as well. So let's see if these trades conform to what we're looking for. So we're looking to sell around the 31.57. We're looking also to buy around the 12.29 level. Was happy to get into it a little bit above that level, but this effectively is the daily high from yesterday. So this is the level that we'd like, that has the potential to. So let's do that. So we just got a little bit further to go actually with this market. So we'll see if we get a pullback to that level, and then we might look to get into it on a structural failure to the upside. So we can be nice and patient, wait for that opportunity to arrive. Okay, so the dollar CAD, we do want this market to pull back if we can to the 31.50 level, and we've had a nice strong move in the 15-minute time frame. So the level that we're looking for this market to pull back towards is the 1678 level. So let's look at these highs. Let's see how this price action is behaving at these levels. So what's being created is actually a nice structure here of attempts to push to the upside, and it would mean if you got in at a break above the 1714 level, you'd be looking at a 16 pip stop loss in that trade. So it might be worth contemplating. We'll see if the strength continues for the session. And then finally we'll look at the pound dollar market. So let's see if we can capitalize on an opportunity. We'd like this market to pull back if we possibly could to yesterday's high, which is very close to the 3080 level. We're at the 3096 level as things stand. So we're talking about a 6 pip pullback really to get to these prices. Okay, so that's the pound dollar. So now we need to wait quite patiently. The other opportunity would be to break out to the downside below this level with a stop loss above 31.42. So again, you're talking about a 16 to 18 pip stop loss in this market. And let's see the increased potential to the downside. We've already had a really strong move to the downside. So we prefer to sell the pullback rather than to sell the breakout, unfortunately. Being a Friday towards the latter part or the middle to latter part of July, we're not overly interested in necessarily staying into trades for too long. We're not, so we're seeing that breakout as things stand. So we've now got the close beneath this level. So we want to see if we get the continuation that we're looking for. Currently getting the pullback. Let's see if this turns around and starts squeezing lower. Okay, so we're beginning to get the explosive move to the downside. We're getting, I want to see if the dollar pairs are selling off again. So let's buy this market. Stop loss just below, and let's also sell right. Let's just be careful and just wait for this 31.25 level, and then we get a continued structural failure to the downside. And a lot of this dollar weakness is probably as a direct impact really on what Trump mentioned yesterday about the fact that the dollar is almost too expensive, and as a result is impacting exports. So that's his ultimate concern. So now let's see what's happening in these markets. So we've had a bit of continuation really to the upside in the pound dollar. We've had the breakout move in the euro dollar, so let's see if we get some continuation. Now look at what's happening here. So we've clearly got the pullback to the level of support, previous level of support, just in here at the 12.28.94. The low is the 12.29.11, so virtually the same level, and the indecision continues really. So what we've had is the pullback to this level. We've had the move back to 12.30. So now what we want to do is to basically look to trade the structural failure to the upside. So now we can go ahead. So if we fail to make a new low and the price starts to turn around and breaks above 12.30, then it's the higher probability trade to look to get into this market to the upside. So we'll see if we get some continuation in the gold market, and again, just to show, we want to go with the prevailing winds, with the momentum which is to the upside. We're just waiting patiently for that opportunity to get into the upside, and to see if we get a bit of a pull back towards the 12.37 level. We just obviously got to be patient with it and give it the time and the space necessary for that to happen. So the dollar CAD has failed to break beneath the low, and is now just in the midst of creating a bit of a structural failure back to the upside. So some interesting price action to work with. So we're looking now at the 12.28.94 level and see if this level holds or not. It should do, but if it doesn't, then it's the first major sign of a structural failure where prices are likely to move back to the downside. But we might get sort of incoherent price action and a sort of choppy trading conditions as well. So just the fact that it is a a Friday afternoon. Just looking at the close now in the dollar CAD, just on the top right. And see if we get a close below the 31.25 level. So we currently have an 18 pip stop loss in this market. We're going to look to mitigate this as quickly as we can. Let's just see if we get this market, give it the opportunity to start to extend to the upside. Okay, I've seemed to have lost my dollar CAD. Okay, so let's see where my dollar CAD has gone. And it just shows you the importance of a bit of multi-time frame analysis. You can get a really strong understanding in terms of if you go through the different time frames. So of course we've already had a pretty strong move to the downside, but we want to see if we get continuation, and for us that would be a confirmed break below the 111.75. So up until that point we're quite happy to just be quite patient with this market. It's a 1 hour chart, so 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 we watch these markets quite closely. We're looking at the gold market just moving sideways, currently coming back to yesterday's high of 12.28. So let's see what is in store for these markets. The fact that we failed to make a new high is a little bit disconcerting. Maybe we shall do so very shortly, which is why it's important to give it a little bit of room. And the pound is just procrastinating. Let's see how price behaves now between the 130.11 and the 128.94. So it's a very, very short amount, but if we get a little roll over to the downside, then we might start seeing a lot of these buyers getting out of this market, and we might see extension lower. However, it could also prove a bit of a basis to support prices to the upside, which is what we'd be looking to do. So we shall wait and see. So these are just the levels that we want to see these markets break. And that same corresponding level, just to give you an indication, is the 31.10 in the pound dollar. See if we get these markets extending and breaking those levels. Now the trade we will look to take is the gold trade just above the 130.11 with a fairly small risk reward in it, just beneath the yesterday's daily high. So the gold market's getting very close to the level that we're interested in buying. Okay, so we're actually just needing to be a little bit patient, really. That's the biggest thing for us right now. No major surprise, being a Friday afternoon, that's the case. And we'll trade what we see. We'll trade the opportunities as and when they arise, and if they arise. And if they don't, then we look to protect our capital and not necessarily continue to look to add to trades and positions for the session. So really, we just want to reiterate that our approach is very important for us to take our time, obviously do our due diligence, not necessarily keep going jumping into the markets, but waiting for the actual opportunities to arise. And if they come along, those opportunities, then we'll look to trade them if they fit into our high probability category for trading opportunities. Okay, so dollar CAD is threatening to push lower, and we would like to see this market lower. However, the daily range is pretty significant today in the dollar CAD, so how much lower we're going to go, we're really not too sure. So maybe this could be the low for today's market. We're obviously we'll have to monitor it very, very carefully. It's the gold market above 1230 is what I'm certainly primarily looking at. Okay, so we're seeing the euro dollar just pull back off the highs. So we want this market to make a low, then to attempt to move high and higher, and then if that fails, then we look to manage this risk effectively if we possibly can. So so at the moment this is just a pullback off the high, so no major need for any major alarm. But it's the next attempt that this market pushes higher will be interesting for us. Okay, so we're seeing a little bit of weakness come in to the euro dollar. I mean, a small bit of weakness, nothing. We're talking about 10 pips here from the highs, so that doesn't constitute significant weakness, but it might keep us out of the gold market. And like I said, it's this next move. If we push up to 1720 or 1718 and then we get that rollover to the downside, then we'll bring our stop loss up and we'll mitigate that risk, and that will be a trade that we'll continue to monitor. If you do have any questions, guys, don't hesitate to post them into your chat box. So we clearly have some sideways moving markets just for the short term. Same situation in the dollar yen. So it's going to be interesting to see whether we get structural failures across the road, across across all these different markets. So that's a break to the upside. That would be a break to the downside in the gold market. That would be a break to the upside in the dollar CAD and a continuation to the downside. So we shall wait and see. Right, okay, so we're getting structural failures to the downside. It could be argued, just looking at this high here, that we're very close to a structural failure in the dollar CAD. We're getting a strong pullback from the highs, and that's all that is really yet. And we're getting a structural failure in the pound yen to the upside. So I would imagine that's a similar situation here, which it is. So so we're getting some clear, concise bit of price action, which is saying to us that we're beginning to see some strength coming into this market, which would make a bit of a it would work hand in hand with a lot of the volatility that we've seen in the dollar pairs over the last 2 or 3 days. So not overly surprised by this kind of price action, and what it does is it just means that we're now no longer going to go and start adding to the dollar pairs or to these dollar correlated markets where we're looking to capitalize on some dollar weakness, when clearly we're now beginning to see a little bit of strength come back in for the remainder of the session, which is potentially likely. Now the reality is we're just looking at the euro dollar. You can see all the upward momentum, and then you can see the pullback that we've currently seen, bouncing off the 1702, which is why we put our stop loss just below it. So if this 1702 level breaks, then obviously this isn't a market that we would like to be in anyway. But it's still the potential to provide support. So we'll see how choppy these markets will be. And then for all these 3 trades, we're going to just postpone the opportunities for a while until we start getting structural failures in the direction in which we want to trade it. But really now we're kind of below its significant levels. So we want to Okay, so we're getting a bounce off this low, and this is what will create a bit of a structural high, so which will be a lower high. So it will be the beginning potentially of a reversal if price action rolls over to the downside and breaks below the 1702. So what we would want to see is structural failures back to the upside. So we'd want to see the structural high, we'd want to see the attempt to break below the 1702 fail, and then we'd want to see this level be broken, and we'll start seeing this price action push back to the upside zone. It could still very well or very easily swing both ways for us in the euro dollar. Okay, so just as an observation, it's just important to note there's some interesting price action occurring, and to do that, I'm just going to share this with you. So let's see what's happened. So when we go over this price action, we've had this market sort of pulling back to these levels, and everything is going quite well. So this is the definition of an uptrend. So we've got a series of higher highs on the way to the upside, and you've also got a series of higher lows. So the lows create this bit of a trend, bit of price action. Now something very significant changes here, because we're no longer in this upward driving trend. So we see what's called a structural failure, which is a break below the 30.89. And now we are at the beginning of potentially a downtrend. So whereas up to here we were looking for prices to push higher, and now we have the potential for prices for pushing lower. The reason why we say that is we now have a low and a lower high, followed by a lower low and subsequently a lower high. So that's quite interesting. And when you see these markets creating a low, and where would you anticipate these pullbacks to move towards? Broadly speaking, within this space here, just identifying these levels, somewhere in between here is where you'd expect this market to pull back to, and that's exactly what happened. Now this low now becomes very, very important, because if you didn't get the next higher high on the way up, it wouldn't be a bit of an intraday uptrend. And that's what we're looking to capitalize on. We're looking to, as long as this market continues to make higher highs, we're quite happy. So of course this hasn't happened in this occasion, and now we're seeing a couple of lower lows. So we want to see if this market makes a third lower low. Then that's really all bets are off to the upside for the time being, because we don't know how low these markets will come to, and what prices they'll start to reach. So that's what we read when we look at this price action. Now what is quite interesting is to suggest, yes, we have seen a structural failure to the downside, but we could easily make a floor out of this market supporting prices. So yes, we did have the pullback to previous levels of support, but it's now potentially a double W formation, which is actually quite bullish. So this market has to move either to the upside or to the downside eventually, and when it does, it will determine to us which direction this market is looking to move towards. And I suppose effectively that's how we ultimately read price action, certainly on these smaller time frames. So same situation here. We had this line in here as a level of resistance, and you can see that we've created a low and we've bounced back to this level and we've extended to the downside once more. So if we break this level, then it's a structural failure to the upside and would actually be quite bullish for us. However, if we break this level to the downside, then we're actually in a downward trend formally. So all of this is worth noting and just worth working with. So you can see these W formations forming. So here's the W formations forming in this market, and what we'd expect is hopefully for this market to continue. So there's your W. This is also your W. So you're looking at a breakout above that level, and here is also your W. And if you notice, the right hand side of the W is or should be higher than the left hand side. So that's an important distinction to make, and we're seeing that across the board. Now, that's because we're looking for these markets to move to the upside, but if we're looking for a market to move to the downside, then you have an M formation. So we need to see these markets break below this level, which would give us the opportunity to continue to sell this market, which is why we've got that level sitting in there at the 31.22 level. So let's see if we get these M formations, which can become quite significant pieces of price action. We've currently, as things stand, we've achieved that in the pound dollar. We've got that situation in the gold market as well. But of course, there's a lot of resistance around this level, so we just have to be patient and just wait and see. Dollar CAD just extending to the downside. So we're seeing our structural failure to the upside in all of these markets. And we're getting the strong impulse move to the downside we're making new lows in the dollar CAD after an unfortunate piece of price action really, which just didn't conform to what we all want in this market to do. We're getting the W formation across the board in these markets, as you can see up on screen. So what can often happen is price can push back to these highs and give us another opportunity to get in to the upside. Okay, there's clearly a lot of okay, so a little bit of volatile price action, as you can see on screen. We're getting a W formation and we're getting a bit of a reversal off that. So this has the potential to create a little bit of a base for this price to continue higher, but it is quite choppy. Don't like the rejection really above the 1230 level. Just very choppy price action. Okay, so we're going to take this buy trade as things stand. So what we've seen is we've seen a W formation. We've had this market extend to the upside. We've seen now the pullback to this previous, roughly to this previous level, and now we get to see some strength come into this market. So now let's see if we get this explosive move up to the low 1230s to mid 30s potentially. Okay, so let's work with this, and we're going to look at this low in here at the 1227.59 level. Of course, we'll always protect our capital. So 60, so 126.70. So something around here, just to keep it outside of the spread, or the 2 times the spread level. So so that's our entry to the upside. We're, and if I show you on a 15-minute time frame, we're really looking to buy in and around these highs, and that was always the suggestion for this market. So let's see if we get some continued strength in this market. It's kind of a strong rejection at the downside, and that's really the idea behind this particular trade. So we're just getting in above these highs. We've now experienced the pullback, and let's take this market to the upside. So we're currently in a bit of a profit in the euro dollar, and we're seeing these sort of breakouts really as things stand in the euro. We just need to push just a little bit higher. We've already seen it in the pound dollar. So we'll stick with our gold trade to the upside. And we'll look to get into the pound dollar if we get a strong opportunity there in that one. So I'm just very conscious of the time, guys. So what we're going to do is we're going to continue this trading session over at the Live Trade Room. So for those of you that would like to join us, you're very, very welcome to do so. We are currently offering traders that are genuinely interested in trading these markets an opportunity to join us for 2 weeks, completely free of charge. And if it's something you're interested in, then please do take note of the payment that would be required for you to continue your access, because I'm sure you'd be pleasantly surprised. We are wanting to provide really high quality trading education where you learn by trading these markets at a very, very affordable rate. So do look into our website at TheLiveTradeRoom.com. You'll have all the information there, and we'll hopefully look forward to seeing you all on the inside. So we'll take this Live Trade Room over to the Live Trade Room right now, and we're currently in profit in the euro dollar, with the expectation for the gold market to actually squeeze up from these levels. So we shall see how we get on with those trades. So if you'd like to connect with us, please do on YouTube. Just hit the subscribe button below, and do like this if you like the overall approach, of course. And you're also welcome to join us on Facebook, Instagram, Twitter, and LinkedIn, and the details are there currently up on screen for you now. Okay, so all that's left for me to do now is to thank you very much for joining us. Do take care, and from everyone here at the Live Trade Room, we look forward to seeing you soon. Bye for now.